Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Syahirah Binti Nasarudin. Today, I would like to give a talk about money laundering and abuse of the financial system. Before I explain in more detail about money laundering, let me explain about the meaning first. Okay, what is money laundering? Money laundering is the illegal process of generating large sums of money generated by the criminal activities such as drug trafficking or terrorist financing, apparently from legitimate sources. The money from the criminal activity is considered as dirty and the process of washing to make it look clean. Nowadays, money laundering can be considered as a common issue in our community and it has become a familiar topic among us. Even when we ask about it, people willingly to take a part into it because this money laundering actually has been started in United States of America in the early 1920s. This money laundering is related to illegal activities and the criminal always use this method to hide their deeds. The funds obtained are from sources of illegal activities such as drugs, gambling, smuggling, and many others. Some of this activity is legal, but the tax from this were not paid and the income not reported to the authorities, and that is why they are not legal. As I mentioned before, money laundering is a fund derived from illegal activities. It will go through a process where this process means converting an illegal funds into unsuspecting form of money. Its main source is hidden and legitimate sources has been created or designed. From this process, it has become a proof where it is legally obtained. There are three processes. The process called as a placement, a layering, and integration. All of these three is only a basic stage to cover the source of the funds that illegally obtained. This money laundering is an illegal act because it aims to generate profit from someone who runs it. As I mentioned before, process of money laundering comprises of three stages. The first one is placement, second is layering, and the third is integrations. For the first one is placement. Placement is the placing the criminal funds into the financial system directly or indirectly. In these stages, illegal funds are placed into financial institutions through deposits, wire transfers, or other means in order to become more liquid. Placement is generally accomplished by breaking up large amounts of cash into less conspicuous and smaller sums before they are banked. The second one is layering. Layering is the process of separating criminal proceeds from their source by using complex layers of financial transactions designed to hide the audit trace and provide invisibility. Funds may be shuttled through a web of many accounts, companies, and countries in order to disguise their origins. For the last one is integrations. If the layering process succeeds, the integration scheme will place the laundered proceeds back into the legitimate economy in such way that appear to be normal business funds. In this stage, illegally obtained funds closely resemble legally generated wealth. The criminal may invest this money for the criminal activity. Money laundering is not only a problem faced by our country, Malaysia, but it is also a problem for foreign countries or referred as to an international problem. It has an impact on the economy as well as impact on the financial system and the market instability. While unable to measure the actual amount of money laundering, the banking system is one of the most important vehicles for money laundering. The complexity and international nature of the banking system allow money launderers to hide their illegal funds. The criminal or use the banks to transfer the funds securely, quickly, and with the appearance of legitimacy. In this respect, banking system can also provide them to convert funds into various products and move away from predicate offences. The International Monetary Fund has stated that the total amount in the world be between 2 to 5% of the world GDP. However, this illegal money laundering has a significant impact on the financial system, and this has resulted in the financial system being affected and all countries involved exposed to risk. This issue been highlighted because we want to see the relationship between money laundering and the financial system. This will study money laundering from the perspective of the financial system in the bank. Financial abuse not only covers illegal activities that can harm the financial system, but it is also involve other activities that exploit the tax framework and regulation with unwanted results. Financial abuse refers to any non-violent crime that result in loss, fraud, and money laundering. Financial institutions such as bank, insurance companies, securities firms, and financial investment management firms are particularly vulnerable to money laundering. Money laundering can be done with or without the knowledge of financial institution. Financial institution may have three roles in money laundering: as the perpetrator, as the victim, and knowing or not knowing the criminal too. The most important vehicle to run the money laundering is through banking system. There are various ways for criminals to cover up their illegal activities. There are several methods to develop their crime permanently, and it is a special technique that has long been used. The methods are smurfing, structuring, currency smuggling, cash conversion, cash-intensive business, shell companies, and casinos. There are several methods and techniques of money laundering, and they are smurfing, structuring, currency smuggling, cash conversion, cash-intensive business, shell companies, and casinos. For the first one is smurfing. Smurfing is a money laundering method where the cash from illegal sources is divided between deposit specialists or smurf to make multiple deposits into multiple accounts in various financial institutions. For the second one is structuring. This technique is breaking one of big financial transaction into many smaller ones. That person who is structuring may be acting alone or in conjunction with or on behalf of other persons. He may conduct or attempt one or more transactions in any amount at once or more financial institutions on one or more days. For the third method is currency smuggling. This is the illegal cross-border movement of currency and monetary instruments physically. The two main methods used for currency smuggling are cash courier and bulk cash smuggling. Cash couriers are the person physically transporting currency or monetary instruments on themselves or with the luggage accompanying them. And bulk cash smuggling is to conceal currency or monetary instruments in vehicle, commercial shipment, express package on private aircraft or boats. For the fourth method is cash conversion. This is the illegal cross-border movement of high-value items like diamonds, gold, precious stamps, and other collectibles which are relatively easy to reconvert into cash and physically easy to smuggle. The fifth method is cash-intensive business. Money launderers may use some business and entities which normally spread out to attract minimal attentions like restaurants, retail stores, liquor stores, cigarette distributors, privately owned automated teller machines, vending machine operators, and parking garage to mix proceeds from genuine business with illegitimate income. For the sixth method is shell companies. Criminals often set up shell companies, especially in offshore centers, which conduct no real business and have no real operational role. Shell companies are used to receive deposit of cash at the placement stage, and then the funds are often sent to another country for integration. For the last method is casinos. Casinos are open to all. There are many people inside and it is very difficult to monitor everybody. In addition to this, most of the people playing inside are regular with a lot of money. This makes casino attractive for money launderers. They place their illicit funds by depositing them with a casino exchange for chips and tokens. After minimum play, the chips and tokens are redeemed for a casino check, and this check representing gaming winnings is deposited to the bank account. Besides that, Money laundering in other institutions has become more sophisticated, but the banking system remains one of the most important vehicles for money laundering. This could involve banking carrier instruments such as bank draft, telegraphic transfers to send funds internationally, and formation of repayment scheme. Money laundering, whether criminal or corrupt, is done through banks using various instruments such as electronic payment system, money transfer and electronic money transfers, branches banking, private banking, correspondent banking, and offshore banking. Money laundering, whether criminal or corrupt, is carried out through the banks by using various instruments. The first one is electronic payment systems. Electronic payment is a financial exchange that takes place between one party and another over electronic media. The instruments of this exchange are encrypted credit card numbers, electronic checks, or digital cash that is backed by banks. The second one is wire transfer and electronic money transfer. Wire transfer, also known as telegraphic transfer, is the process of transferring money from one institution or person to another. Wire transfer was earlier used by the telegraph companies that carried the wire transfer of money among their office. While the electronic money transfer is also a wire transferring method, it is the system of transferring money from one bank account directly to another without any paper money changing hands, which is used for credit transfer and debit transfers. For the third one is branchless banking. Branchless banking is a strategy of distribution channels which are used to provide financial services and seeks to expand the concept of the traditional bank branch. This is done through the growth and development of technology. The development of these alternative distribution channels has created new opportunities for criminals to misuse such technologies for the purpose of money laundering, such as internet, which means home banking, mobile banking, automatic teller machine, ATMs. For the fourth is private banking. Private banking are the services for the extremely wealthy clients. The big banks charge customers a fee for managing their assets and for providing the specialized services of the private banks. For the fifth is correspondent banking. Correspondent banking is defined as the provision of banking services by one bank, which means the correspondent, to an overseas bank, the respondent, to enable the respondent to provide its own customer with cross-border products and services that it cannot provide itself, typically because it lacks an international network. And the last one is offshore banking. Offshore banking business is somewhat different from that conducted onshore. In both cases, banks that deposit and make loans offshore banks have virtually no checking deposit liabilities. But the use of bank has been made more difficult in a number of countries by the introduction of anti-money laundering measures such as suspicious or significant cash reporting requirement and the disallowing of false names or anonymous accounts. These anti-money laundering measures introduced by many countries in recent years has forced money launderers to change their method to some degree, while in many instances this has resulted in fairly basic charges such as smurfing or using bank accounts of associates. Any country incorporated into this global financial system may face the risk of money laundering. Therefore, money laundering activities can occur in any country, but they can have a more significant impact on developing countries with relatively small or fragile financial systems or weak economies that are very vulnerable to disruption due to illegal activities. They damage critical financial sector institutions and they can intimidate foreign investors and reduce a country's access to foreign investment and foreign market. Money laundering is a complex economic crime that has many negative effects on the world financial system. It cannot be effectively managed without the international cooperation of the ministries of finance, central banks, financial institutions, and financial regulators. But law enforcement and punishment are the most effective measures to combat money laundering. In this case, the state must criminalize all forms of money laundering and establish efficient mechanisms and institutions that can enforce regulations. With international cooperation, this problem of money laundering can be solved. This problem has been solved since the 1980s. The major international organization involved in the fight against money laundering is the Financial Action Task Force (FATF), the Vienna Convention, the 1990 European Council Convention, and the Basel Committee. There are four main international organizations engaged in fighting against money laundering. The first one is Financial Action Task Force, second is the Vienna Convention, the third is European Union Directive, and the fourth is Basel Committee. For the first one is Financial Action Task Force (FATF). The FATF was set up by the government of the G7 countries at their 1989 Economic Summit. The task force was given the responsibility of examining money laundering techniques and trends, reviewing actions that had already been taken at national or international levels, and setting out measures that still needed to be taken to combat money laundering. The second one is the Vienna Convention. The Vienna Convention, adopted in December 1988, lays the groundwork for effort to combat money laundering by creating an obligation for signatory states to criminalize the laundering of money from drug trafficking. For the third is the European Union Directive. It is adopted in November 1990. The Council of Europe Convention established a common criminal policy on money laundering. It sets out a common definition of money laundering and common measures for dealing with it. For the last one is Basel Committee Statement of Principle. In December 1988, the G10 Basel Committee on Banking Supervision issued a Statement of Principles, with which the international banks of member states are expected to comply. These principles cover identifying customers, avoiding suspicious transactions, and cooperating with law enforcement agencies. Besides that, financial institutions should know and record their true identity of their customers, which means know your customers, record transaction details, report suspicious transactions and activities, and respond to requests for information from appropriate government authorities. This is done to prevent them from being used by criminals for money laundering. To combating money laundering, the financial institution also should take a part into it. As I mentioned before, there are four things that financial institutions must do to prevent money laundering. The first one is know your customer. The objective of doing this is to enable the financial institution to have positive identification of its customer by collecting some proof from their customers, such as a photograph, documentary proof of personal identifications, and address proof. Know your customer policy helps the financial institutions to prevent from unwittingly use for the transfer of deposit of illegal funds. It also helps the financial institutions to understand their customers and their financial feelings to be able to serve them better. For the second one is record keeping. This is a fundamental part of combating money laundering, and without it, many of the requirements cannot be met. In this respect, whenever a bank establishes a business relationship or concludes a transaction with a client, the bank must keep records of the identity of the client and identity of the persons acting on behalf of the clients. The records are to be kept at least 5 years after a business relationship is terminated. or a transaction concluded in order to the FATF regulations. For a third one is reporting information. Financial institutions must, within the prescribed period, report that prescribed particular concerning a transaction concluded with a client if in terms of the prescribed amount for their countries. This also includes detailed information about transactions and activities that are or appear to be suspicious. If a financial institution suspects or reasonably ought to have suspected that a transaction has been made for money laundering purpose, it must be reported. For the last one is response to information requests. All major jurisdictions have agreed to limit their bank secrecy rules to prevent the financial institutions to be laundered the money of criminals through them. In this respect, upon receiving an information request from appropriate government authorities, a financial institution should respond quickly to information requests from appropriate government authorities in money laundering related cases. Not only that, the government also should establish a system for identifying, tracing, freezing, seizing, and losing assets. To create this system, government must be able to work effectively with their international partners to exchange evidence and share the result of the crime seized. Finally, the government is advised to implement restraint and perseverance in the non-financial sector and business and remain vigilant against emerging threats because criminals have learned to use either less controlled industry to launder their money. My thought on this issue about money laundering and abuse of the financial system is I agree with all the author has said in his research because each of the country involved should ensure that the meaning and knowledge needed to prove the crime of money laundering can be contingent from the objective factual situation. Money laundering and abuse of the financial system are often done in international contexts. Measures taken only at the national level or even at the union level, regardless of international coordination and cooperation, will have a very limited impact. Therefore, the steps taken by the union in the field should be in accordance with and at least strictly with other actions taken in the international forum. Union action should continue to take into account the recommendation of the FATF and other instruments of international bodies active in the fight against money laundering and abuse of the financial system. With a view to strengthening the effectiveness of combating money laundering and the abuse of the financial system, relevant union legal action should, where appropriate, be aligned with the international standard on combating money laundering and terrorism and spreading financial adopted by the FATF. Furthermore, misuse of the financial system to channel illegal or even legitimate money for terrorist purposes poses a clear risk to the integrity, proper functioning, reputation, and stability of the financial system. Besides that, there also must be effective, equivalent, and convincing criminal authorization should be imposed on natural person convicted of money laundering. The criminal liability and sanctions, and if that is not possible, which may due to the basis principle of domestic law, civil and administrative responsibilities and sanctions should be imposed on legitimate person. This should not exclude criminal, civil or administrative processes that are in line with legal persons in countries where there is more than one forum of responsibility. Such measures should be without compromising the criminal responsibility of natural persons. All restrictions must be effective, proportionate, and controversial. Lastly, there should be additional crimes appropriate to money laundering offences, including participation, association with or conspiracy to commit, attempt, assist and help, facilitate and advise commissions unless this is not permitted by the basic principles of domestic law. Thank you for watching my video. I hope in this video it will give you a new knowledge about money laundering and the abuse of the financial system. Again, thank you. Assalamualaikum warahmatullahi wabarakatuh.